and welcome to I'll start again. Hello, everybody, and welcome to Your Overseas Homes virtual event, March 2023. My name is Christopher Nye, and I am the Senior Editor at Your Overseas Home and Spain Property Guides. We have been helping customers relocate and buy abroad safely for, well, personally, for about 25 years, and as Spain Property Guides. And Your Overseas Home, we started about 10 years ago, and we've helped thousands of people to move to Spain. And you can see our online guides, our hopefully inspirational newsletters and property mailers. And also, of course, we help you by connecting you directly with the trusted experts to help you in your purchase, one of whom is joined me today, Tim French from EMAC. So it's great to have you with us today, whether you are watching us live or you're catching up on demand. Now, if you have any questions for Tim as we go along, please type your question in the Q&A area below. If we don't get round to answering your question, please don't worry. Tim will be available in his booth within the exhibition hall to answer any more questions that you have. Right, I am gonna, we've only got half an hour, so we're gonna skip right on. So I'm gonna ask Tim to introduce himself, and then we're going to, and then ask some questions. But like I say, please do throw your own questions into the Q&A chat below. So Tim, how are you? And tell us a bit about EMAC.
Yeah, thanks, Chris. So so my name's Tim French. I've been a mortgage broker, Spanish mortgage broker in Spain since 2004. Fully qualified and regulated and registered by the Bank of Spain. And based in Alicante as well. So arrange mortgages throughout mainland Spain, the Balearic Islands and the Canary Islands.
Right, so tell us a little bit about the mortgage environment at the moment, because I know it's difficult in some countries, but I believe it's not difficult to get a mortgage in Spain for most people.
I still find it very, wouldn't say easy, but we still have to, satisfy their affordability criteria and everything else. But I'm still getting 70% loan to value mortgages regularly for most non-resident clients without a problem. So 70% above purchases of 100,000. If it's under 100,000 purchase, they may drop it to 60%. But yeah, most my mortgages are above 100,000. So.
But with that, so you get so if it's a property of say 200,000 euros, we might be able to get a mortgage for 70% of that. Yep. So we would have to stump up about, okay, so we'd have to stump up the 60,000, but also we'd have to cover the buying costs ourselves as well, I assume.
Yeah, so the mortgage is based on the purchase price or the valuation, whichever's lower. So if the valuation came back a little bit lower than the purchase price, then the mortgage is generally based against the valuation. But so you need, if it was the purchase price, then it's 30% deposit plus the closing costs, which depending on area in Spain can be anywhere between 10% to 14%.
Okay. Just tell me a bit about that valuation process then. So I found, let's start off at the start. So I am looking to buy a property in Spain. I haven't got quite as much money to spend as I want to in cash, so I'm going to look for a mortgage. So I would contact you and just explain the process.
Yeah, so it is a good idea that somebody, before they even look for a property, they have an understanding on how much they can borrow. So that is a good idea. So we can get a decision in principle in place before they begin their search. They provide us with all the paperwork. First of all, I sit down with them on the telephone and go through all their incomes and affordability and expenditures and all that. And then once they send me all their documentation and my application form, then I submit it with the lender and we get a decision in principle in place. And then subject to valuation, of course, because they haven't found a property yet. But then it gives the clients an idea when they go and look for a property, how much they can afford and what sort of property purchase prices they can look for. Okay,
tell me about best current interest rates. I know it's an interesting interest rate environment at the moment. What kind of rates are you getting?
It depends on lenders, obviously, and the loan amount. Sometimes, if it's a higher loan amount, sometimes they might drop a bit. Generally, it's I have a 5-year fixed at 3.5, 3-year fixed at 3.2, 1-year fixed at 3. I mean, I did a mortgage the other day, which was quite a high loan amount, and they offered 20-year fixed at 3.5. So. I mean, that's not advertised rate, but when the loan amounts go higher, then they can be negotiable. Yeah, so the Euribor rate went up to 4%, then it's only dropped back overnight to 3.3, and it's just risen again to 3.5 again. So after the fixed rate period, generally it tracks whatever the Euribor rate is, which currently is 3.5, and then they add on a spread. Can be anywhere between 0.5 and 2% on top of that. So let's say it was a 3-year fixed, after 3 years on the anniversary of the mortgage, then it'll take whatever the Euribor rate is and then add on the spread. Let's say it's Euribor plus 1, it'll be, and the Euribor rate was 3.5, they'll be paying 4.5.
And the European Central Bank is kind of increasing rates at a more steady level. They're still quite a way behind, say the Fed or the Bank of England, aren't they? So we're expecting interest rates to increase, I would imagine.
Well, a year ago the Euribor rate was less than 0. Then it, as I say, 3 weeks ago, it went to 4%. Then suddenly overnight it dropped back to 3.3, and then it's risen a little bit again to 3.5. So. From what I think, it'll go back to like 4%. I don't guarantee that, but a lot of people seem to think it won't go above 4% this year.
Okay, just a message to viewers. If you wish to ask a question, I think you have to do that in the Q&A. I know there's a raising hand option, but I'm not sure I can access that. So if you have a question, do please put it in the Q&A box, and I will put it to Tim. So how do I work out how much I can borrow as a non-resident?
So the banks work on a debt to income ratio when they calculate the figures. The debt to income is generally between 30 and 40%, depending on incomes. But so if somebody earned, let's say or joint income was €6,000 a year, and somebody had a mortgage in the UK and a loan in the UK, and it totaled 3,000, then that would be 50% of the affordable debt to income, and that would be too high. It has to be below 40, 35, depending on lender. So, and the Spanish mortgage would be included in that. So if somebody had, 6,000 income and only had 2,000 worth of mortgages and loans in the UK, and then including the Spanish mortgage, and that's fine. So it has to be. Well, I like to try and keep it around 35, but we have a couple of lenders that go to 40 as well.
And what can their income include? Is it just a range of sources? It's not presumably. I mean, people have quite complicated arrangements these days, don't they? Especially if they already own property, which they perhaps use it as an investment. What
is declared on their tax return, and obviously if they're employed, their P60s, and the banks will ask for their bank statements and Experian credit reports that we have to provide, so they can, cross-reference what mortgages and loans that they have.
And there's no option like, for example, an old-fashioned buy-to-let mortgage.
No, they're all straight repayment, and based on that you're buying the property for a second home, holiday home investment. There's no buy. Okay. There's no interest. For example, there's no interest only. It's straight repayment.
Okay. How do they? Well, firstly, we've had questions about buying it in the name of a UK company. Sounds a bit complicated to me. Can you tell us about that option?
Yeah, it is possible. There's not loads of lenders that do it. I mean, there's 2 off the top of my head who will do it. They obviously also have to. The company has to open a company in Spain, a Spanish company, an SL company, as well during the process, and but it's possible. And generally, the maximum loan to value will be 60%. It can be a little bit complicated, but it's doable. Yeah.
Okay. Let's just go through. I think you mentioned a P60 for self-employed people.
For employed people.
Oh, okay. So how about self-employed people?
So so self-employed people will have their tax returns. So the banks will want the SA 100 and the tax calculation for self-employed, and the same for people if they have their own limited company and they pay themselves a small salary and then dividends. They will also need the in that case the SA 100 and tax calculation, and also the company counts as well.
And going back how many years?
Some lenders want 2, some lenders want 3.
Right. So I'm thinking something rather important happened over the last 3 years, which might have wrecked a few people's books. If someone wasn't trading over the COVID period, how would they get around that?
They do tend to take an average of the last 2 or 3 years, but in my experience, they've been a little bit sympathetic towards that COVID year. So they are really looking at, they might ask for the accounts before COVID to see what it was. And they'll obviously see the latest, and yeah, they'll take a sympathetic view towards COVID because it's affected everybody, and it was quite unique, quite a time, wasn't it? So.
And the same would be, I suppose, the case for people who are perhaps on furlough over that period, and their income was reduced because of that.
Yeah, exactly.
Is it a kind of when you're applying? Is it a kind of faceless bank, and we just the computer says no or computer says yes, or is there room for talking about it?
No, there is a couple of lenders who are quite strict with their scoring system, and the computer kind of makes a decision for them. And but I have other lenders who assess it properly. It'll get sent to the risk department. The bank manager I deal with will fight if the risk department a bit strict. The bank manager has a little bit of authority, and in some cases he's even got the area manager to step in and speak to the risk department and sign things off as well. So yeah, some banks can be a little bit rigid with their scoring system, but others are generally the ones I prefer to use. Will use their own mind and common sense.
And what about so then they do a valuation of the property. Does someone go out and actually look at it, or is that just based on?
No, there you go. Yeah, so the bank has generally at least 5 or 6 different valuation companies within the panel that they use, and the computer system will pick one randomly, and then they will send the valuer will go and visit the property and do a thorough inspection. Once and they do that once we have the mortgage pre-approved, the clients have obviously found the property, then the valuation gets ordered.
Can one use that as almost instead of a survey? Because I know that it's always a bit of a grey area whether to get a survey like you would do in the UK. Can you use the fact that the banks valued it for you as your own peace of mind? I mean,
if a bank's willing to lend on the property, then that's a good sign, because they're not going to want to lend on a property which isn't in good order. However, if somebody's buying quite an old property, something which was built maybe 40 years ago, then it would be worthwhile doing a proper full structured survey, and not just a bank valuation. You'd want to, especially if you're spending a lot of money, and even if it's a lower money. I mean, by the time you paid a 30% deposit and closing costs, you're talking a 50,000. So, but no, I had a client recently who was buying in Benahavis. It's quite an expensive property, and it was an older property, a traditional style, and she paid was over €1,000 I think for a full structural survey, but it gave her the peace of mind.
What is the typical mortgage amount, would you say? I mean, do people get mortgages on a very low price property of sort of 60,000, which you can still get, or is there sort of a lower limit or an upper limit?
Some banks don't like lending much, less than 50 or 60,000, because it actually costs them money then in that case. Or if it does go below there, they might put the interest rate a little bit up, or insist that they take the home insurance with a bank or a life insurance. But I've done a few mortgages over the last year, which has been around 35,000. so it is doable. I mean, the banks don't love doing those ones. They prefer they prefer the big mortgages because they make more money from them, of course. But no, there's no the minimum mortgage technically would be 30,000. So.
Okay, well, I mean, obviously, in the main buying areas, you're not going to be able to buy very much at that level. But do you work all over Spain?
Yeah, all over mainland Spain and the Canary Islands and the Balearic Islands.
Okay, brilliant. But you're based on the Costa Blanca, I understand.
Yeah, in Alicante.
Brilliant. Okay, so mortgages. What documents would I require to get the process started and to get you over the line and get that actual mortgage? Yeah,
so a copy of your passport, last 3 to 6 months bank statements. I say 3 to 6 months. Some banks want 3, some want 6. Last 2 or 3 years P60s, some want 2, some want 3, and 6 months pay slips. You're in a case of self-employed, as we discussed, the SA 100 and tax calculation, tax return for that to last 2 or 3 years. Experian credit reports, they do accept other credit reports, but I find the Experians are a little bit more easier to understand and read for them. The banks also, want to see where the origin of funds are coming from. So if your funds are coming from a separate bank account or investment fund, then we need to see proof of that as well. And an application form, which I send to the clients as well, a generic one.
Okay. Does this all have to be translated into Spanish or notarized or anything complicated like that?
Only certain countries, generally, like I had a Slovakian client the other week based in Slovakia, that needs to be legally translated into Spanish, but no, not for the UK client base. Okay.
Now, what sort of terms of a mortgage are we looking at? I mean, I'm 59, so would I have to pay it off by 65? Not that I'll be finishing working by then, I hasten to add. Would I have to pay it off by the time I finish working?
Generally, the banks take the term up to age 70. Do have another lender who go to 75 as long as the clients can prove that they have pension provision in place. But yeah, if you're in your 60s, that can be a short-term mortgage, and obviously the mortgage repayments are going to be quite high. So many times I recommend to the clients, if they have any children who are working, that we can also include them on the purchase and the mortgage, and we can use their ages and then get 20, 25-year term. That can arise some questions sometimes. They will say, "Oh, my son and daughter are looking for a mortgage and buying a property in the UK. Will this affect them?" No, because the banks in Spain don't have access to an Experian. So as long as they don't tell them about it, UK banks wouldn't know. So, and there's a future inheritance tax benefit of the children being on the purchase, because they would each already own a share of the property.
Yeah, it always strikes me. I'm always puzzled why more people don't buy as a family. It seems like an excellent way of, not cascading the wealth down the generations, kind of living inheritance, if you will. Okay, so how long should the mortgage process take? If I'm looking to buy in the summer, I guess I should, or by the summer, I guess I should get going.
That is a good, as I say, before you look for a property, it is a good idea to get the decision in principle in place, because you've saved yourself a couple of weeks, or at least a week. But yeah, once the client has found a property and reserved it, then there's generally it's a 3-month reservation contract in place. But I can get the mortgages through from start to finish. I like to say 8 weeks, but I can get it in 6 weeks really. But sometimes unforeseen circumstances might arise here or there. So it's better to say 8, and it's better to make sure that the reservation contract's 3 months as well. So, but yeah, there's also a 10-day cooling off period. So once the binding offer has been released and it gets sent to the notary because that's where the binding offer has to be signed. Usually a Spanish lawyer, who, if they have power of attorney, will do that. And then once that's been sent to the notary, there's a 10-day cooling off period. So 10 calendar day, which has added a little bit extra time to the process.
Okay, it all sounds quite efficient. It's not. It doesn't sound like the sort of manana culture that we've been sort of led to believe. It's a bit like in Spain. It all seems really efficient and quite easy.
Yeah, I mean, I think it is actually. I mean, especially if the clients have given power of attorney to a Spanish lawyer, there's a lot of stuff that can be taken care of, that they don't have to worry about coming back to Spain to sign. The banks, the people in the banks, they've got the sales targets and so forth, so they want the mortgage to complete as quick as they can as well. So yeah, the process is pretty streamlined. Excellent.
Okay. Now, do you have any upfront fees?
No, my fee is paid on completion. So that's 1% of the mortgage amount.
And what about, do I need a Spanish bank account or an NIE number or that sort of thing?
For the regards to the NIE number, then you need that to be able to buy the property. So as long as you have that for going to the notary, so to sign, you need it for then. The bank account, the lender which we put the mortgage with and is granting the mortgage, they will open your bank account. So and that's where the mortgage payment will come from that bank account. So you need to make sure you've transferred. Well, you need to, before completion, the rest of the deposit and the closing costs needs to be in that lender's, in the client's bank account with that lender before completion as well.
Okay. Right. Well, that's most of the questions I have. But what I suppose the other thing I would ask is it worth, even if you don't need to get a mortgage, even if you can be a cash buyer, is it worth getting a mortgage anyway, because rates are still pretty low compared to historic levels?
Yeah, I mean, I have many clients who you could look at their income and their bank statements and you think you don't need a mortgage, but some people like to use banks' money, don't they? So, and maybe the exchange rate, the pound isn't so strong at the moment, is it? So maybe it's not bad time to borrow money in euros instead of sending your pounds over now. But a lot of people still like to have cash in the bank, don't they? So and use the bank's money.
Yeah, that's true. I mean, we've been finding that with at your overseas home with people buying in America, that if you're buying a mortgage, then you kind of bypass the problem with the pound being so weak against the dollar at the moment.
Okay. And if such client has taken a mortgage and they don't necessarily need it, they can make overpayments on the mortgage. There can be very small penalties if it's in a fixed rate. The banks can charge 2% of the amount you overpay, but if it's in a variable rate, then it can be zero. So if somebody was paying off 1,000 euros, then during the fixed rate period, the maximum the penalty will be is just 20 euros. So there's
although we don't like to think about it, what happens if it all goes wrong and suddenly you can't afford to continue the payments on the mortgage on your lovely Spanish home? What happens then?
Well, there's been some cases. There's been some cases like during the COVID period where the banks offered people an interest-only period.
Okay.
So that is an option. I mean, you go to the lender and you say, "Look, I've lost my job," or they will help. I mean, they generally offer an interest-only period in that case.
Okay, brilliant.
Or they give you time to help, or you can time to help you sell it. I mean, if the repossession process in Spain is very, very long. So if somebody couldn't afford to pay their mortgage, then they would have a lot of time to be able to sell the property as well.
Well, that's encouraging. So I mean, in a negative kind of way. So perhaps more understanding or a longer process than if it was your home here. Okay, brilliant. Well, unless is there anything else that you want to add that anyone should know about that we haven't discussed yet?
I can't think off the top of my head. If anybody's got any questions, then I'm available in the booth today. But yeah, it's just a case of making sure that when they're looking for properties, do their due diligence, do their research, speak to local based people. Like myself, I'm based in Alicante. There's lawyers based in the area, agents based in the area. Just give them a bit more peace of mind.
Okay, brilliant. Well, speaking of lawyers based in the area, we're going to be talking to one, I think, in about an hour. We'll be speaking to Emma, who's also based in Alicante, on our session about how to buy in Spain safely. So, thank you very much, Tim, for really on point information there. I think we've learned. Oh, hang on, we've got a question. I'm going to, as a 40-year-old, what is the typical term offered by Spanish banks?
Yeah, 25 years would be no problem. Take it to 40, 50, 65, no problem. So potentially you could even get 30 years as well. Banks don't like to go to 30, but they can do. There's not, if somebody was, they could go to 30 as well. They've had 30-year terms before. So easily 25.
Okay, fantastic. Now, well, I'm in the Spain. Well, firstly, if you have any questions, if you do think of any more questions for Tim, or you want to start the application, even better, if you want to start the application process, do go and speak to Tim on the EMAC booth. You can also watch this webinar again. It will be available on demand should you wish to watch us again. Or contact Tim directly after the event if you have to shoot off.
Just to say, my generic fact find is available in the booth as well. So if somebody wants to complete that and send it to me by email, then I can also give them an idea of lending as well.
Yeah, why not get it all organised today? We tend to think of this event as a kind of your first viewing trip. You can get all those sort of bits and pieces done without the cost of going to Spain. And then when you do go to Spain, you can just spend the whole time looking at lovely properties. Yeah. So just to go through a few of the sessions that we've got coming up, we've got the essentials of moving to Spain in a few minutes. And then it's at 10 o'clock. Then we've got how to buy in Spain safely. That's at 11 o'clock. We've got living in Spain after Brexit. That's at 12:15. We've got a guide to buying property on the Costa del Sol at 2 o'clock. I'm hosting all of those, so we'll know each other quite well by the end of that. So thank you once again, Tim, and thank you for our attendees. Thank you.
Welcome. Goodbye. Thanks very much, Chris. Cheers. Bye. Thanks. Bye.